Hello,
Hey,
hello. Hello, mates. How are you?
was it cold over there, mate? You got a jumper
Oh,
on.
I tell you what, it's absolutely freezing. Yeah, I've just I've just had to put this jumper on because I'm waiting for some fingerless gloves to come through the post as well, mate. I'm that cold.
Okay.
Yeah.
Well, I
So
guess it is
yeah.
that time of year where you're starting to get a little bit chilly. Hey,
Well, do you know, it's a
it's
funny
winter
thing
tomorrow,
actually
right?
because I am cold. But I'm particularly cold in my office because my radiator has just decided that it's only going to heat up right at the top. So I decided to bleed it and do all that stuff, and I can't figure out why it's not working. So everything about this room right now is just cold. It's good because it's keeping me sharp,
Keep you on your toes. Absolutely right.
keeping me on my toes.
Well,
Exactly.
it's as I said, it's winter tomorrow, man.
Winter tomorrow, is it?
Mhm. Isn't it? It's supposed
Well,
to be.
winter's kind of. I always
It's
think winter
summer here.
starts when the clocks change, but maybe it's a bit later than that, is it?
No, mate. No, it's there are four seasons, right?
Yeah.
December, December, January, February is summer in the southern hemisphere and
Yeah.
winter in the northern hemisphere.
Okay.
Where you been, man?
So autumn, in accordance to
Autumn's
that, would be
gone, done.
September, October, November.
Mm,
Well, our autumn doesn't really start till October.
I can't help that.
I mean, I'm sure traditionally that was the case, but back in Charles Dickens' time or something. But I think the seasons might have shifted a bit. I'm not sure.
Well,
Um,
funny we should be talking about that actually because it is Monday and we are coming into a new month. And I got this funny feeling that throughout 2020, for various reasons, not least of which would be COVID-19, some would say Brexit's supposed to wind down. Others would say that there was a presidential election that upset, or did it? I don't know, because I don't trade that way. But talking about seasonality in particular, and it's my considered opinion that seasonality, if it was a thing in 2020 to date, probably wasn't as accurate as would normally be the case. Am I just stabbing in the dark here, or would that be accurate?
do you know, mate? It depends on the. It actually depends on the product. So you're absolutely right in respect to the products that have been um, more affected by those particular events. But generally speaking, where the seasonal data kind of kicks in, um, it might be that there's a negativity that is being that is influencing a specific market, but the seasonal aspect of it might just about keep it afloat enough to make it not go down as much. So I think the seasonals, to a greater and lesser degree, are always in play. It's just that you might not see them manifest in the way that it would seem on a chart. So we look at charts and we say seasonally that the pound is up during this particular time of year, and I think what will happen in the years where something negative is affecting the pound is that it won't go down as much as it would do if it was also a bad seasonal time. So I do think the seasonality still plays a part. It's just that we have to maybe just adapt the way we read it, depending on what's released or what's being talked about and discussed.
Okay, well, because we are now going into new seasons, as it
Yes.
were, winter becomes, or sorry, autumn becomes winter, spring becomes summer in the southern hemisphere. Crops tend to mature and be harvested at those points of the compass, or sorry, of the calendar. I got the funny feeling that seasonality is going to be a thing over the next couple of months. Yes, no?
Yeah. Yeah, I agree. I agree, and I think what you're alluding to is the fact that we're anticipating maybe a calmer market in the way of news, and we're certainly not going to get a guy with floppy hair from the White House tweeting on a daily basis anymore. So the broader kind of things that affect the market will probably take precedent. And with Brexit calming down as well, kind of thinking about a UK thing, the broader things in the market will take precedent. And I guess that's what you're alluding to, and I'd agree with that. I would completely agree with that, and we should probably look at some. Let me show you some of what that data is suggesting right now.
Cool.
Let's.
I'm thinking about a trade at the moment, but I'm only thinking about it.
Okay, all right. Well, we'll come to that in a moment. Let's have a look at. Let's have a look at the dollar as an example here. I think the dollar is really interesting at the minute. I think and I'll show you the dollar index, and we'll have a look through some dollar crosses as well. But let's start off with the seasonal data.
Hi, Subra.
Because, hey, Shubra, how you doing? So this is what we got with the seasonal chart on the dollar, and what it suggests is, so you can see December is here. What it's suggesting is that there's a little bit of choppy price action, but generally speaking, we're probably more likely to rally into the middle of December, when after that we are looking for a pretty big decline. And what we should have seen was through October, right the way up to the middle of November, we should have seen a really big rally in the dollar, because traditionally and historically, that's what's happened. Weighted average and time over time, that was the general movement with the dollar. Now, if we look at the dollar, and I'm going to show you the dollar index because I think it's a much more interesting way to look at the dollar. In some respects, and we could look at trading view. So any of you that need to see the dollar index, have a look on trading view. I think there's some sort of deals on trading view at the minute as well. And
60% off on the top one.
60% off. There you go. So trading view is probably worth a bit of a.
I think it's 40% off on the middle one, and maybe no, don't quote me on that. 60%, definitely 60% off the top product.
Oh, do you know what? Si, I do actually need a plumber. So if you do know a plumber, but if he's shit, I don't know if I want to get him involved. I mean, I'm a shit plumber. But yeah, I could definitely do with him. How are you doing, buddy? Haven't seen you for a while. Hope things are all right and going well. I'm going to show you this on the seasonals. So let's have a look. So this is the price action, and this is the seasonal pattern here. And I'm looking at this on a weekly chart. So if we think that October, we want to see from October, which is here. Actually, let's look at it on a daily. Might be better. So this is the October. So now we see sort of middle of October, it tends to rally to the middle of November. Now the middle of October is around about here. Right about here-ish. It just comes slightly off the screen. Yeah, around about there. So it dips down, but then it dipped right back up again towards the towards the start of November, and then by the middle of November, really, we were pretty much where we started. So that's pretty much the starting point at the middle of October, and that's the starting point at the middle of November. So there wasn't a massive move to the downside. Now, what's happening today is a break to the downside, looking like almost like the opposite of a shooting star here. But it looks like it's creating a low. Now, if we quite like the look here on the seasonal aspect for the dollar, it would suggest seasonally that we should get some upside. Now, what's becoming quite interesting is how we then look at the dollar in comparison to some other currencies. If you look at the dollar Swiss, for example, the dollar Swiss is getting some upside today. But no, I don't know if things have changed. But look at the euro. You know, the euro, if anything, is fairly flat. Maybe if you look on a daily chart, though, the bar is green. So actually what we've got with the euro is upside against the dollar. So the Swissie's down, the euro is up, the pound is slightly higher against the dollar. So the dollar itself is due to rally, maybe for a week or two. But against these other currencies today, we aren't getting the movement in the dollar. So what that would suggest to me, if we were trading purely on seasonals, is that we should be looking for opportunities with the currencies that are rallying against the dollar. So if we look at the euro, for example, where is the euro in comparison to the rest of the price action on its chart? And the highest point for the euro is the September high. Looks like the September high was here. Now that's not that far away. Now, if we were to trade seasonals and we assume that nothing else is going to be a catalyst to drive this in the opposite direction, then what we should be trying to do is actually trade the euro dollar short from in and around the point that we are now. You know, if we want to try and get a setup, that's on the daily chart. So let's have a look what a setup might end up looking like. And it's probably, you know, if we go down to the hourly, we don't really see a lot going on here just yet. We've got a fairly good trend, and actually a really good trend on the hourly chart, which has brought us to the particular point now. So let's think about the information that we've got on this this particular chart and see if there was anything that we want to trade. There's the low there. There's a higher low there. There's a higher low there. What am I doing? I'm going to start that again. There's a low there. There's a higher high there. There's a higher low there. Yes, Fad, absolutely right. Absolutely right. We only use the seasonals as one of the components. So there's a higher high here, higher low here, and a higher high here. So sorry, higher high and a higher low there. So if yes, you're absolutely right. So the seasonals are one of the components. Now, if we are going to be putting together a plan, if you like, a list of check sheets that we need. You know, what do we need to kind of make a decision on whether we want the, you know, whether we believe in the euro dollar, then we would need a lot more, and we can look at COT data. So we'll bring that in one moment, but let's finish up with the euro and see what it's saying. So we know that we got a trend to the upside. However, at the end of this trend, we've got this bar here. Now, everybody knows what that bar is. And if you don't, it is a bearish engulfing bar. Bearish engulfing. And what gives it the engulfing parameters, if you like, is the previous bar has been taken out to the upside, and then the lowest point of the bar here has been closed beneath. So this bar here is an engulfing bar. It's a bearish engulfing bar. And when we see it at levels of stress, if you like, at levels that that could create some downside, you know, if we anticipate selling to go into that area, then we can utilize this bar. We can start thinking about this bar. Now, the good thing about this bar so far is that it hasn't broken to the downside, and the traditional way to play it would be to put an order in, you know, 1 pip or a specific amount of pips below with a stop loss above it. Now, that wouldn't be my favorite option personally, but that is a way that we could play it. But what I'd prefer to do with this is use it as part of the information. So let's just put the fundamental aspect aside for right now. Let's just see if we can build a technical case for shorting the euro. So what we've got is an uptrend, but we've got a level of potential resistance because of what the previous breakout. Now we have got a bit of a reason to look for a dollar long because of the seasonals. So do we have a technical pattern which suggests that we should be going to the downside? No, we've just got one bar. So let's see what would promote a technical reason to go to the downside. And what we'd look for here is an area to be broken. So if we think about the trends to the upside is being caged in by this point here, the thing that would promote some downside would be a break of that trend line. And thinking a little bit out into the future, what we've got is a potential for a left shoulder and a potential for a head. And it looks to me that if that was to develop, bounce on the neckline here, a really good technical picture would start coming in, which would eventually meet us breaking through the neckline and breaking through the trend line, and then you've got a decent technical reason to start shorting the euro dollar. So that's the sort of thing that we want to get out in front of. So technically speaking, all we've got right now is a hint that there's some weakness up here because of the bearish engulfing bar, but we don't know, how likely that is to come into play. Now, that would be of interest to you, wouldn't it, Geoff? Especially if tomorrow we saw the daily pivot step to the upside, and price also managed to tip its way under here. So let's say that the daily pivot tomorrow did something like this as well, and so by tomorrow it sort of like steps up and it's somewhere along there, then that would also put us under the daily pivot. So there'd be confluence there. So that's something. Excuse me one moment.
Pizza delivery. Oh, it's the plumber.
No, yeah, thanks, Si.
No, not the
plumber. No, do you know what? I'm having loads of problems with. Oh, it doesn't matter. It's boring. But it's actually an important call, which I will have to ring him back later on, but not during the show. So anyway, so this is what I'd like to see. Now, Steffi's just asked what the daily pivot is. So we'll have a quick chat about that first. And then I'll pass to you, mate. I can hear you're itching to tell me something.
Am I?
I don't know. Maybe you're not. Okay.
No, I know a good plumber.
Yeah, no, just maybe not in Brighton.
No.
All right, here we go. Right, daily pivot. To be fair, I can live with a little bit of cold. Daily pivot. The daily pivot. What is the daily pivot? Okay, so the daily pivot. So if we take a trade now, and if the head and shoulders form, we add to the trade. No, Fad. It wouldn't be a take a trade now, and I'll come to that in one moment, and I'll show you where I would take a trade. I'll show you exactly where I would take a trade, and it would be around this area. But there's one thing I'd want to see before I did that. So the daily pivot. The daily pivot is yesterday's highest price plus yesterday's lowest price plus yesterday's closing price. Okay, so the previous day, I should say, not yesterday, because it was Sunday. The previous day's highest price, the previous day's lowest price, plus the previous day's closing price, and then you divide that by 3, giving you an average of price. So we'll see the day, the average of price from this. If we call this day 1 and day 2, when we look at day 3, then the daily pivot is going to be here. Then this would tell us the average price of the previous day, and that would tell us that the average price on day 2 was higher than the average price on day 1 because the daily pivot is stepping to the upside. Okay, so let's put that into practice so you can see what I mean. So we've got the high plus the low plus the close. And we've got, there's yesterday's high. It's in and around. Well, I won't be exact. There's yesterday's low around about there, and yesterday close. Oh, sorry, what am I doing? No, that's not yesterday's high. Yesterday's high is coming all the way up here. About there, isn't it? Let's have a look at that on a daily chart. Make sure that's the case. There's the lows. Yeah. So you can see that yesterday's high was, sorry, not yesterday's. Friday's high was pretty much the same as Friday's close. So the high, now if we put these numbers into our equation here, the high is at 1.1965. Forget the last number. The low is at 1.106. Now this is your job, Geoff, if you want it. And the close is 1.19. Let's call it 65 as well. Now, can you add these numbers up for me, Geoff? I've got 1.1965. I've got 1.106. 1.106. 1.19, sorry, 1.1906. So I've got 1.1965 plus 1.1906 plus 1.1966, call it. You're muted.
Okay, that'll be 3.4991 divided by 3, which will be 1.166 something.
1.166.
That'll do, won't it? 1.166.
No, it'd be 1.19, right? 1.1966.
Hang on. 1.16. No, be 1.16.
So did you take the number 1.196?
1.166 should be.
Okay, can you do this one more time for me? Add 1.1965.
Hang on, I'll get a calculator. This obviously my head's not working.
No, don't. I was relying on you to do the calculator. Yeah, you got a calculator?
I'm pretty good at that. Okay.
Right, 1.1965.
1.1965, yeah.
Plus 1.1906.
Yep.
Plus 1.1966. Divided by 3.
1.1945 or 1.1946 actually.
Okay, so we get 1.4946.
No, 1.1946.
Sorry, 1.1946. Okay, so we get 1.1946. Now, what we should see here, 1.1946 is this daily pivot at that particular price. Now, if I put my line on there, and you scoot yourself over here, you'll see 1.1944. So that's pretty close. And the only reason it's slightly out is that we didn't get exact numbers for the high, the low, and the close. So that's the equation. So what that is telling us is that this average price is higher today on yesterday's average price. Friday's average price was higher than it was on Thursday, and it was higher than it was on Wednesday, and higher than it was on Monday. So it's telling us there's an uptrend in prices. So that's the daily pivot, Steffi, and that's the calculation. And we can use that. We can use that when we determine, whether something's trending. Then we can say that that something's trending because on average price is closing higher. Is moving higher and higher and higher over the course of the week or the day, the days. And you can do the same with a weekly pivot and the same with a monthly pivot. Now, how we trade this? So if we were going to trade, we wouldn't trade this now. What we'd want to see here is our pattern forming. Now, the two places I'd want to trade this would be, number one would be on the right shoulder. And I'll show you how to do that in a moment. And number two would be on the neckline. So the neckline becomes our add point if we get our right shoulder trade. Okay, so how do we trade? How are we going to trade a right shoulder if it comes? If it doesn't come, well, there's no trade. How are we going to trade on a right shoulder? How are we going to know when that's going to be? Well, what we'd want to do is wait for price action to do this, coming down and bounce around. Hold on, I'm just going to put where my neckline would be, which is there. Now we'd want it to bounce back up again. We want it to bounce back up and give us our right shoulder here. So we'd have a left shoulder here, we'd have the head here, and we'd have the right shoulder here. Now, the way that we would trade it in this area is by using a trend line. Now, that trend line would come from this. So that's the way that we would want price action to go from here is break below, break back up, trade it in this area, come down, break the neckline, come back to the neckline, and then you've got an add point there. So that would be trade 1 and trade 2. That would give us a trade on the right shoulder, and it would also give us a trade on a neckline, on a trend line. Does that make sense, Fad? And this is an hourly chart, so you got it. Cool. So what we'd want to see there is we'd want to come down to a 15. When we saw the price come back up here, we'd want to use our indicators to then determine whether we've got a trend moving to the downside on a shorter term time frame, i.e. the 15 or the 5. So we could get into it properly, but we've got plenty of time. I mean, that's 1, 2, 3, 4, 5, 6, 7. It's probably tomorrow. You know, it's probably not until tomorrow that we would actually get a trade on this. But let me show you the danger right now. So now we talked about the seasonals and we talked about the technicals. Now this could be a hindrance or a help, and the price action will tell us. To me, it is, Fad. It's nothing but a hint at this stage, because it's not on a trend. It's just, and it's not even on the area really. When I look at it, let's just delete some of these levels here. It's not even on the area. Where is this resistance forming itself? It's kind of in the middle of nothing. I mean, I don't see anything there. Yeah, I don't even see anything there. There's a low there, so that's an interesting price point. This point here and this high is an interesting price point. So that would be enough. That would have been enough to get me into a trade if it happened there. But it's still got some room. So all I'm really reading out of this right now is that there is some weakness, and some people have taken profit maybe a little bit earlier than is necessary. I think there's probably a little bit further to go. And if there's not, then we'll see. We need to see it manifest itself into some sort of reversal pattern here with the head and shoulders pattern. That's how I would personally read that chart. I don't know if you got anything to add to that, Geoff, but that's how I would read that chart. Which cool, man. Yeah. All right. Brilliant.
Yeah.
And it's one of those.
When you're done.
Sorry, Matt, I was just going to say, it's one of those things that sometimes you use engulfing bars as an entry, and other times you use them as a piece of information, and it all depends on where it sits in the overall picture of price. You know, that's the first port of call when you got a price, and I relate this back to everything that I do. One of my favorite ways to trade is with something called level 2. If any of you know what level 2 is, level 2 is where the industry has to disclose where their market orders sit. Now, they might delete those market orders, but let's say that they do sit there. Now, one of my favorite things is to find a price that I believe in on a stock. It's only on UK stocks that you're going to get it. And then say, right, that's where I believe the price is. And then look at level 2 and see if there are any really big players sat at that price. Because it will... can you get this level 2 on Forex, Steffi? Yes, you can. It's called the order book, which it's the same sort of thing. There are companies that do it, so yes, you can. Yes, you can. And I really like it, but it's just another way it's just another trading methodology I'll use to take certain trades, but not everything. I don't trade it when I look at foreign exchange, because I don't have order book. Only when I look at UK stocks. Sorry, mate, you were going to add something.
You're right. Yeah, look, very quickly, because we're out of time in this session, but unless you want something more before we change the subscription session, I'll give you a quick opinion on euro dollar.
Yeah, I'm done with my analysis on that for right now.
Right, mate. Very, very quickly, another way to look at this, and you'll probably finish up with exactly the same result. But here's how I would approach this particular subject. First thing I would do would be look at this chart, which is the monthly chart. And the reason I look at that, because we have recently broken through this monthly trend line. Big level. And the next big level, in my humble opinion, is this one here, which is 121. Let's call it 121. And I'd be surprised, frankly, if we don't actually have a little bit of a look at that level, because we've been there a few times before. We have rejected the broken trend line. We dipped below it, yes, but now we've skyrocketed back above it. Now, I'm a very, very keen follower of reversal patterns, and I don't see it right now. In fact, last week's candle is extremely bullish, closed on its high. Very, very strong signal. This has got further upside to it. Daily chart has broken through the top of this range that I've got here, and that will be my key factor in determining whether I can take this short or not. It'll be this range. The other thing to note is this high, which of course is going back to August, and we are approaching that level now. Do we get excited right now? No, because, okay, on an hourly chart, we have got that bearish engulfing bar. But do we really see the opportunity yet, going back to these bigger picture timeframes, to go short? Aren't we expecting to hit this level? Aren't we expecting to hit that level? And exactly the same level that I just described up here, perhaps. Aren't we expecting that to happen? So why would we want to trade against that at the moment, is the question that I would ask myself. Then I would come back and see what sort of a setup I've got. If I then determined that, okay, we've hit a strong resistance level, then maybe we're looking to come back, but not until we do. So it's really not on my radar right now. It's on my watch list, but it's not on my radar. I'll watch it and I'll wait until we hit that level. Then I'll be looking for reversal patterns. So on the hourly chart, if I was to be thinking bearish at the moment, and I'm not, I would be thinking, okay, we've got the bearish engulfing bar. What I now need to see is something to confirm that the bears are actually going to have a crack at this. And that would be, at the bare minimum, a lower high. So you've got the bearish engulfing bar. You now want a lower high. As I said, this will probably work out to be exactly the same scenario as Ash has just described to you, just in a different methodology. So I don't care about the head and shoulders at this point. What I care about is price coming down to meet a support level. Maybe that's it there. It could be somewhere down here. And then bouncing off that and failing to take out that high. That's the key for me. So if we bounce off support, yet the bulls are not strong enough to take out this high, then they're going to produce a lower high. As I said, it may well be that that becomes a head and shoulders. And that's where I'd be interested in trading. Depends on what sort of candle structure I got there as to whether I'd be willing to play it at that point or wait, as Ash has described, to break this low, come back and retest it. It'll be exactly the same scenario. And I would then look to enter, but I would enter there, not there. That's just a different way to play it. But that's exactly what I'd be looking for. As I said, very, very similar scenario, but there's no way I'd be looking to trade it now. Love the fact that there's an untested daily pivot. So that is of course, of interest. So I will be looking for this, but I'm not that keen yet to trade it short, I've got to say. And that, dear folks, is where we must end this session for those on YouTube. And we thank you very much for being here. We'll be back again tomorrow at the very same time. For those of you who are subscribers to the US session, we'll be back with you in just a tick.
Can I just say one thing? Sorry, before we go, just to deal with you, Roy. Your question. Hey, SF. By the way, yes, I would. Now, unfortunately, it is a slightly more detailed discussion, which I will have to have now. But we do need to come off the show now. But yes, I would. But probably not a lot. But I would be anticipating a little bit of weakness in the S&P coming up. But there's certain things that I need to see before that before I could be convinced of that. But yeah, if you're looking for that, mate, then I would I encourage you to keep looking for signs and signals for some downside S&P in the coming week.
Thanks for checking in, guys. We'll catch you tomorrow.